Every major crisis changes the business model of several businesses. At the end of every crisis, you have new winners and new losers. And this time will be no different. Howdy guys, this is Honda here and you're watching the Honda Show. Today's video, I'm going to teach you about how to evaluate Airbnb and should you add Airbnb to your portfolio of stocks. So let's get down to brass tacks. This year, a bunch of IPOs and SPACs have come to the market and the markets have been very kind to them. I say markets have been kind to them because nobody's combing through their balance sheets. Why? Because the balance sheets don't exist for a lot of them. It's just very impressive to see how many companies have been able to go public so successfully in a year where we have a pandemic going on and there is economic destruction all around. At its essence, Airbnb is a very simple business model. It connects both the guest and the host for a fee on both sides. Airbnb has basically three verticals right now that it makes money from. You have short-term stays, long-term stays, and then you have experiences. The greatest companies that are able to generate a lot of profit are companies that usually have a huge mindshare in the minds of people, its customers. And Airbnb has been very successful in doing that. Airbnb is a big brand. It is used as a noun and as a verb in a very short period of time. The company was founded in 2008 and look how far it has come. These valuations on the screen, by the way, are from their March lows. It is valued way more than that right now. It not only lists your friend's spare bedroom, but castles, yurts, private islands, everything that you can think of. When Airbnb got started, nobody took it very seriously, including me, because how comfortable are you staying at some random stranger's house? That doesn't seem very appealing to me. Not only has Airbnb validated its business model, it has shown that humanity is generally good and you can trust random strangers. Airbnb is different from Booking.com or from Expedia because those are sort of extensions of the legacy hotel businesses, whereas Airbnb is more of a disruptor in the space. A lot of companies in the share economy, they need densities, they need population for their business models to make sense. Airbnb has successfully demonstrated in this crisis that they can shift from urban areas to rural or suburban areas very, very easily. Even though Airbnb is in the hospitality space, it has still more in common with Amazon than the legacy businesses like Hyatt's and the Marriott's of the world, because it is a very low-cost business and it is more of a platform. I'm not saying it's going to be the next Amazon because, well, everybody wants to be the next Amazon, but phenomena like Amazon, they come in once in a couple of 100 years or maybe 100 years. Travel as we know it is over. Nobody really knows how it will look in the post-pandemic world, but I think these masses of people traveling in hordes to plastic, artificial tourist cities, I think that's not going to come back that soon, and with that kind of intensity. I think people are going to travel more locally in more decentralized fashion. That's going to make these legacy hotel chains very challenged because they can't move their properties, but Airbnb, it can list properties from different areas where people want to go. Airbnb has been up against a lot of competition in the past. A lot of these legacy hotel chains have tried to kill Airbnb by using their connections with politicians in big cities like New York, which is a very big center. I mean, New York was the biggest market for Airbnb pre-COVID, and post-COVID, the legacy hotel chains will definitely be more compromised than Airbnb is. So Airbnb has shown that it can survive pre-pandemic and post-pandemic, which is a testament to their business model. My recommendation to you, if you're a hotel or a motel owner, buy some Airbnb stock at the right price, of course, just to hedge your bets. So what are the comparisons that you can compare Airbnb stock to? Can you compare it to legacy hotel chains? Can you compare it to Expedia or Booking.com? I think it has more in common with Expedia than anything else. When you're trying to compare Airbnb, what are you trying to compare it to? Are you comparing it to hotel chains or are you trying to compare it to Booking and Expedia.com? Well, I think it has more in common with Booking and Expedia, not much in common in terms of business model with the hotels. So let's compare them to Expedia and Booking.com. Bookings.com and Expedia basically have three sources of revenue. You have intermediary business, you have merchant business, and then you have online advertising. Airbnb right now does not have online advertising as its source of revenue. Expedia has a higher percentage of merchant business when compared to Bookings.com, but if you look at it, Expedia and Bookings.com are more like extensions of the legacy hospitality business, whereas Airbnb is a legit disruptor. Bookings has a margin of 35%. Expedia has a margin of 10%. I think eventually Airbnb will catch up and it will tend to have margins close to bookings.com. Since it does not have revenue from advertising right now, let's just say it ends up at 25% in terms of gross margins. One of the big reasons the market has given such a huge valuation to Airbnb is because this crisis has shown it is a very dependable, very resilient business model. The company's core business was international travel till February and March, and from then on to pivot from global to local travel with virtually no downtime. Come on, how many businesses do you think can do it so fast and so successfully? The most you can learn about a person or a business is when times are tough. And during this time of pandemic, Airbnb has shown that it is a very resilient business by a long stretch. The next stage of Airbnb could be beyond travel. It could be an experiences company, which might be a very big business in the future. All the young kids now, they don't really care about anything but experiences. So it's a nice platform for them. The business's ability to pivot from urban to rural has just been amazing. Even though the business has not been able to grow from last year's May and June numbers, but it has matched those numbers and without any advertising, which is a very, very big deal. Now, a successful launch of Airbnb IPO is a very big deal considering the company was in crisis mode in March. When a company launches an IPO, one of the first questions you need to ask is, the money that they're raising, what are you going to do with it? Because you don't want the company to be wasteful. In this situation, what Airbnb is going to do is it's going to retire some of the old debt and it's going to use some of the proceeds for future investments. The best companies to own are companies that do not need your money, and Airbnb does not need your money for a fact. The only reason it came out with the IPO is because it wanted to provide an exit to long-term employees who had options and long-term investors if they want to cash out a little bit. Like a lot of tech companies, Airbnb has different classes of shares. This is to ensure that the founders and the insiders, they control the company even if their shareholding falls below 50% of all the outstanding shares in the market. Now, certainly Airbnb is a great company and it is the right company to buy at the right price. Right now, it is a little overvalued for me. What has happened is everybody is comparing every company to Amazon, which has been a phenomenon, and I don't think anybody can be Amazon. So people are overpaying for equities with the hope that the earnings will catch up to the valuations that they're giving to the companies right now. I think it can be very risky. Alright guys, let's conclude the video. Let me give you some salient points and whether you should buy Airbnb or not. Let's go for it. 91% of Airbnb's business comes from direct search. It does not come from paid searches, which tells you it's a solid company. Point 2, these IPOs and SPAC deals are getting huge valuations because interest rates are so low. So people have nowhere else to go. So they end up taking a lot of risk. Point 3, companies that have a lot of retail interest are difficult to value because retail investors, they don't really look at a lot of metrics that institutional investors do, and they just dump money into stocks of companies they like. Point 4, as of now, Airbnb is in good stead. It does not really have a viable competitor. Point 5, Airbnb is close to profitability and is doing really good, but you need to make sure you're looking at those margins very, very carefully going forward. Point 6, I think it's a great company. I would love to buy it, but the valuation is too high right now. I would like to buy it under 60. I'm not sure if it's going to come down to under 60, but if it does, I'm definitely a buyer and you should be too. Alright guys, that's it for today. Tell me how you feel about Airbnb. Write a comment below. Give me a thumbs up if you liked the video. If you didn't like it, give me a thumbs down. But I think it's a good video. I gave you good content. Give me your opinion. It matters to me. Alright, see you in my next video.